Okay, let's should focus and talk about personal finance then. With the markets, with the Sensex scaling a new high, is it a good time to start investing, or should you be looking at redeeming your mutual fund investments? Who better than Dhirendra Kumar to answer that question? Dhirendra, with the Sensex back over 21,000. It's been a fairly long wait. We now have analyst reports predicting 22,000 by the end of this year. What's your sense? Do you think retail investors should attempt to enter the market and time it now?
Don't get carried away by this 21,000 points on Sensex, because this might look tempting, but this is not a good enough reason for you to get started. And this is also not a, and this is not a reason to stop your investments. If you have long-term money, keep investing. And this 21,000 points, on Sensex is nothing to be pleased about or nothing to be happy about, because if you look at, when the market attained 21,000 on Sensex, and today, and what has been the inflation so far in the last 4 or 5 years, this will look like, the Sensex is not at 21,000. If adjusted for inflation, it will well be, 15,000, 14,000 levels. So don't get carried by that. You have only control on your plans. You have only control on your allocation. One should be investing in equity, and that is a good enough reason to start your investment. Be at it, be regular. And 21,000 or 15,000 or 20 or 30,000, don't bother. If you are investing for 5-7 years, you don't have much to worry.
Dhirendra, hi, afternoon. So is this a good opportunity to rebalance our portfolios, perhaps exit some funds that were not performing well?
Yes, it is always a good time to be, weeding out the duds or weeding out the funds which you bought it randomly and it wasn't planned for, and now you realize that it's not working out, or it just turned out to be something which was not suited. So, but investors generally face a resistance that if the money which you invested is in losses, then you then you procrastinate. You avoid disinvesting those. So yes, this creates a conducive environment, at least mentally you can reconcile to. I think, every investor should be getting out of those investments anytime. But yes, if 21,000 makes it convenient, do that.
Okay, so Dhirendra, if you were to start an SIP in one good fund now, which one would you recommend?
I would say that don't get carried by this 21,000 points. If you are a first-time investor in mutual fund, start an SIP, and start an SIP in a balanced fund, and maybe a conservative balanced fund. If I have to choose one or two, I would say Edelweiss Absolute Return Fund or ICICI Prudential Equity Volatility Advantage Fund.
Okay, let's address some queries then, Dhirendra. First, a viewer query today is from Alnoor Dodia, who invested 10,500 rupees in Sundaram Tax Saver in December 2010. The current value of his investment is about 9,500 rupees. He wants to know, it is still in lock-in period till December 2013, and he wants to know whether he should withdraw or continue.
Sundaram Tax Saver has been a disappointing fund. Of course, most equity investment has been disappointing, but this fund has been more disappointing than the markets in general and other tax saving investments specifically. So I would say that you invested, and you have recovered the steep losses that this fund was into. It will be wise to redeem your investments from this fund in December 2013 when your investment is out of the lock-in period.